The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Well, we've got some history-making markets right now in the silver. As you can see, we broke out of the old high we made 5 days ago, up around the 89.30 level. Wow, 1839 level, and that sets up the next one is 1865 start. You know, it was the end of the Civil War. No, wait a minute, 65. No, it ended in 66. Okay. Anyway, this is the next target. We'll be looking is between 1865 an ounce to $19.30 per ounce. Now, gold is still lagging badly. We haven't even made a 61% retracement of this last correction from 1365 down to 1310. So this is it's still making a small retracement back. So it's amazing that this is happening because gold usually is the leader, but this time silver is leading it up. So we'll see. Now the question is this a big top in silver? You don't know that until it has some type of a reversal pattern. It would have to get down below 1750 before you could even begin to think that that would be something like that. So that's it. The number we're looking at on the gold, that 61% retracement comes in at the 1331 level. As I recall, I've just got so many things to look at today that it's hard to look at them all, but I wanted to put this gold chart up to show you the same thing that we're watching here. We would love to have been a buyer down at 1296. We didn't get that low. We only got down to about 1305. And since that time, we've rallied up to about 1328. Which is nothing more than that 61% retracement of the intermediate high we made at 1340. In order for gold to break out, anything above 1345 would do it for me. That would be taking out the 78% retracement of that old high. But it's really, if you're a precious metals trader, it is rather troubling that you can't get gold skyrocketing as silver is skyrocketing because they're viewed as the same. But remember, gold is 6 times the volume and volatility that we get, well, at least the volume anyway, that we get in the precious metals market. So it's very important, to take a look at that. I've had a lot of requests this morning to look at certain things. The first one that someone has asked me to take a look at is the TLT. Now, this is the opposite. This is the long, ultra long T-bond shares. I believe it's the 20-year, but it's still pretty close. You'll see that that's it's completing a double top. We've already done that. We'll be about the same price, I guess, as the opening today. Maybe a tad. Well, the bonds are down a little bit, so it'll be about a tad higher. Would be my guess. But this is a longer term, pattern going back over the past year and a half. And this is more or less a completed pattern. If you look at the high that it made in 2015 in January, you'll notice how explosive that was and how, it was just really a rush to get into the market. This is not the same type of pattern that we're looking at here, folks. This is, very, very normal. We had a 50% retracement off the October low. The expansion that we're looking at right now is spot on 1.618 of the whole year's range from February, down into April. So that's going to be enough to stop the market. It's acting very normal. That's basically it. If you looked at the ABCD structure, you'd see 3 of them in there that are relatively coming together right around this 140 level, which is within about 50 cents of where we traded last night. So this is another one that's interesting. Of course, the The reciprocal of that is the TBT, and that one has been going down. It has made new lows by just a little bit than the previous lows, so we'll see if this is going to be it. There's a big difference, folks, between the Treasury notes and the Treasury bonds. The Treasury notes are they're much weaker than the bonds. They don't have that tremendous amount of strength. You know, the bonds went up and took out the old high, came within one tick at 173 and change level, 173.23. The old high was 173.24. They haven't done anything. They're still trading around 173. But that's interesting because the Treasury notes themselves are a full point under the bonds, and the volatility in the Treasury notes is far less. It's probably 50% less than there is in the bonds. So there's more people coming in selling the 10-year and 20-year than they are the 30-year. But to me, this is just get it off my soapbox here, but people are searching for yield, and that's not what you should be doing in a time like this. You should be protecting your money and not worrying about the situation of whether you're going to get a big return on your money. Be concerned of your money. That's a secret to investing that was given to us by Bernard Baruch that we talked about yesterday. Okay, now we're in the stock market. We have to pay a close attention here today for a couple of different reasons. We went from 21. Oops, let's put this in so we can all be on the same page together. Hold on here. Okay, as you'll see, we made a high into that Brexit at around 21.20. Then we broke down to 2,000. That was a 382 retracement. Then we rallied up. Do you see that 0.43? That was, you'll see that ABCD structure within that ABCD pattern that we had. Then we came down and we tested the 1.618 of that swing yesterday at 1985. And now we've had a run of yesterday. It's been Monday, Tuesday, this is Wednesday. So we're rallying up now to this 2047 to 2050 level. Folks, this is very important. And the reason why is that will be a 78% retracement of that high that we made at the 2062 level. And it's also an equal move from the rally that we had during June 24th. It would be exactly the same amount of a rally. So pay really good attention to that 2047 level. That's the real key. Well, that from my perspective, looking at these things, but you know, the news that comes out, whether it's totally bogus on the Brexit thing, I think they've blown a little bit out of proportion like they do everything else, but that's neither here nor there. So that's what we're watching here in the stock market. That area of 2047 is very, very important. So far, we've been to 2045 last night. We're only a couple points away from that. So we want to watch that very closely. The next one that we've had a request on is the corn. Corn has been pretty active here. We're having some really nice swings, and we'll cover corn when we get back. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back and we're talking about December corn. That's new crop corn. I posted in the 30-minute chart to show you the pretty good swings that we're having. We had a 15% swing from the high to the low last night, but that low on the left there, that was an important one at the 383 per bushel. That was the 78% retracement on the daily pattern. And of course, we rallied over 20% in a matter of 2 days. And what we've done now is we pull back to a retracement level that looks like it's going to have some pretty good support at the 390 per bushel level in corn. Anything below 382, breaking out that low that we made several days ago, would tell us that this market is most probably going to go lower and not higher. But right now, we're right up against some really strong support here at this $3.90 per bushel level. So you could be a farmer here without risking an arm and a leg. You don't have to buy any equipment or own the land or anything. You can lease everything as a trader at the CME by buying a contract D's corn, which is 5,000 bushels, which is basically about 200 acres. And then you would see whether you'd be looking at what's going to see what's going on. Okay, the second question that's come up in the den is about the silver, the fact that we made new highs up here. There should be some pretty strong resistance at that $18.60 per ounce level. That's a 1.27 expansion, and that's also an AB CD. So far this morning, we've been as high as 1857, and we've sold off 23 cents since that time. So that's pretty close to that 1860. That just might do it. Folks, if you want to sell something, sell the gold, because it's the weaker of the two, and it has really strong resistance at the 1332 to 1342 level in the gold. So that's really see what's going on. I've had several questions last night on the TBT. I still think that's the way to go. I'm wrong right now, and they might have to try it a couple of times, but this long-term pattern has got the skull and crossbones on it, folks. These long-term ones, just they don't fail very often. They really don't. And especially when they're spoon feeding us, that's what they're doing in the financial markets, is they're telling you you've got to search for yield, you've got to search for yield, you got to search for yield. And that's not the way to do. If you could reverse this process, folks, and go back, and I happen to be involved in this back in the early 80s when the interest rates were 13% for T-bills. Can you believe that? And Treasury bonds were trading at 56, not 173. And you couldn't get anybody to touch that stuff. The only thing they were buying at that time was tax-free municipal bonds, because you could buy a tax-free muni bond that was yielding 18%, and that was a no-brainer. The problem is they were called away 2 years later because the interest rates had turned and everything started down. But I believe we're very, very close to this topping of this 35-year cycle. All the reasons behind it, I've talked about these many, many times. And the question is, why didn't the reason why I didn't use the trade of the year is just because of what I'm going through right now. Every time I put a trade of the year on, it was day after day after day of questions. How could you be so dumb? How could you be so dumb? And folks, none of those trade of the years ever failed. Not one. In 14 years, I didn't have any failures. There's 3 years there where they didn't make a lot of money, but and the others were made a great deal of money. I mean, we bought crude oil at $11 a barrel. We bought soybeans at $3.50 a bushel, gold at $265. And we bought the Nikkei at 6,000 or 6,700. So these are the kinds of things that we're looking at. But the timing might be totally off. So let's just not worry about the TPT. If I get stopped out, it's not a big deal. And I know you are. It's fun because some of the folks in this Tiger's Den we've got to know, and it's really fun. Let's get to the timing aspect because we got a monster coming up here, and it was one of the questions that came up in the den. It came in through email last night, was to discuss this Bradley. Okay, the Bradley model, folks, is based on a man named Donald Bradley, who came up with the idea that because all of the planets have a certain weighting, and this weighting is based on work that was done at Yale University by an astrophysicist back in the 20s, and it has stayed to this day, whether it's a positive or a negative. And today we have Mars is going to direct motion, and it is one of the bigger negative, I think it's one of the biggest negative patterns as far as the energy involved with it. But what he did was he put an energy number on all of the planets. And what Bradley did was he assumed that this had something to do with the stock market. So he made a graph on whether the power was either positive or negative, and then he put it into the Sidera graph that we know as the Bradley model. He published it in 1947. He wrote the book in 1946. It was published by a really small company out of Minneapolis called Llewellyn Publications for $4. Nobody did anything with it until Dr. Miller showed it to me, and I said, we ought to go back and research it, which we did, and we found that it has a great deal of applicability in the market, and that's all it is. It's just probabilities. That's all it is, folks. But as you can see from the chart that I posted here, we are looking at some type of a monster date here coming in starting today, going all the way out to July the 5th, the day after our 4th of July holiday. So we've broken down below that support, and we came right back into that same zone again. So we are in no man's land, but we're right into this zone here. So don't be surprised to see something even more volatile than what happened with Brexit. And it could possibly be to the upside too. Maybe they whatever they is, will rectify all this stuff that's going on, and then we'll be able to see. We have a question about, does the Bradley recycle every 7 years? No, it does not. You could go out and make a prediction 200 years into the future, because all it's doing is looking at the planetary positions of these things and whether they're positive or negative. And that's the key to watching this stuff. So it's just a probability, and it's far from being perfect. But when it's right, boy, it's really right. And we should be in a really strong trending market, either up or down, starting around between now and July the 5th. The $64 question is, was that bottom that we made on the 27th, was that it? Well, that's within 2 days of the bottom. I suppose it's possible, but there's so much coming together between now and July the 5th that you have to wait till it's out of the way to see if that's going to be the case. So that's the way the interpretation of the Bradley looks at. Now, Norm Winsky does a great job with this, and he's also uses the retrograde motion of the planets. And we do have Mercury. Let's try it again. Mars is going in direct station. It's coming out of retrograde. So this will be fun to see what's going to look. Okay, we'll be right back. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the chart of the Dow E-mini in here, and as you can see, on the 27th, we did make a 1.618 expansion, but look at this longer-term picture. You can see the three drive to a bottom pattern that happened, several weeks ago, and then we had the really strong rally into this high that we made, and we basically backed off very, very little. There's been no panic anywhere, folks, with the exception of maybe Japan a little bit, but it certainly did not happen in the UK, and it certainly didn't happen in the DAX. All of those held up incredibly well. So these are the things that we're looking at. Pay close attention today to the area where we're trading right now in the S&P, around this 2046 level to 2048 to 2050. There's about a 4-point zone in there because that's going to be an equal swing that we had once before, just 5 days ago. And so pay attention to that, because if we don't get much above that and turn down, that will tell us that we're looking at pretty significant top in here today, if this is in fact going to be a top, because this is how the markets they react very, very violently when the shorts start to cover, and it goes up a lot more. We saw that when it rallied 50 handles before, and that's what we're seeing right now at this 2047 level, is a 50 handle run off the bottom. So we'll see how that ends up over the course of the day. Now, one of the other questions that I got today by email was the British pound, because we were talking about that down at that 131 and change level. Folks, this on the long-term monthly chart, this has completed a perfect ABCD pattern, just as this is perfect as you can get it. The AB leg is equal to the CD leg. The 1.618 expansion of all this came in at 131. 30. The high or the low of that move was 131.19, and now we're almost 4 handles, 4 points higher in just a little bit of time. Now, in order to get this market back into equilibrium, it would have to get up into that 142 level. That would be a 10-point rally, off of the bottom. And if you look at that BC swing, the last time we had this back in 2015, we went from 145 to 158, so we rallied 13 handles then. So this market is still very, very bearish, but they're showing signs that 1.618 expansion held perfectly. The euro is even a clearer picture, in my opinion, because we're trading at 111 and change now after testing 109 several times. But if you look at this euro chart, stop and think the news that came out. They basically they were very, very negative, this stuff, and with the euro, it's made a 135 pattern. We couldn't even take out the March lows. As a matter of fact, we went to a 1.27 expansion and a 78.6 retracement of that March low down at the 109 level, and now we're trading above 111. This is another reason that tells us that this market has probably made a pretty good spot. And this might be the reason why people are coming in to buy stocks, because they realize that there's no longer, any fear, given the fact that we have things going, absolutely crazy. But you're seeing something different in the Treasury bonds and Treasury notes, and that is that they're still buying. That means that there's a flight to supposedly quality, I guess, but this is why something's not right here, folks. That's just the way that it looks from a technical picture. These markets are not doing normal things. So you watch them one at a time and, try to pick the best spot that you can, for looking at this. Now, we've come off about 30 cents in silver off of the high. We were looking at 1860. It got to 1857 and broke pretty quick. So we'll see what's going on from that level. But the market is holding up so far pretty well. This 2047 to 2050 level in the S&P is very, very important because it's an equal move to the last rally that we had before we went down to the 1985 level that we hit yesterday. So keep an eye on that particular one. the gold, all it could do, the gold could not even make a 61% retracement at 1330 so far. It's only been to 1327. That's given the push that silver was giving it. So we'll basically look at that. Another question about these bonds and notes that someone asked me is the notes are acting far weaker than the bonds, which is unusual because the notes are much greater in volume and liquidity because of the fact that that's the shorter term rates, and those are the ones that people, they mark your credit cards and auto loans and stuff together with that. So they're acting much weaker. Another question someone's asked is about the crude oil. We went down to that 45 and change level, and now we've rallied back. And what we're doing over the last 4 or 5 days is we're making a 61% retracement up here at this 48.60 level in August crude. It has to get above 49.20, so there'd be about an 80-point swing in there that would tell you that you were wrong on this. But at that 84.60 level, you're looking at a 61% retracement from that whole move down of the secondary high from 151, down to 145 and change. Now that's neither here nor there. So we'll keep an eye on these as we go through. The Dow has been the stronger. The NASDAQ has been the weaker of the indices, and so those are things that we want to sort of keep in mind as we go through some of these charts that we're looking at this morning. Okay, we had one other question, and then I'm finished for the questions for this morning, and that was in the, oh dear, where did I put it? Oh dear. It was silver. What? I'm missing it. Someone's giving me a question. I didn't write the darn thing. Oh, it was in the German DAX. Let me put this up here because we did this yesterday. The question was what happened after this move here in the DAX. You'll see this German DAX went down to the 92 level, and now we're trading above 95. So we've had a tremendous rally in the DAX. Remember, this was a test of the low from the 24th, and we were already lower on the 24th in the S&P. So the S&P went down and made a 1.27 expansion of this swing, whereas the DAX, all it was doing was pulling back. But it's going to be into some pretty stiff resistance up around this 95, 96 level in the German DAX to take as we're watching it. My opinion here on these grains, someone's asked on the grains. I think that we're still in, we're just beginning the growing season now. Well, we're farther along in that in corn, but we're in the midst of the growing season, so anything can happen. And I talked a little bit about the wheat the other day, and we had that hammer bottom, and we had a pretty good rally off of that. But as you can see, the wheat is still in a downtrend because you completed that big ABCD pattern up at the 550 level, and then you took out the lows from March. So that's not a good sign. So you should get a good rally here, but long term, I'm not so sure.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and US dollar denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, so we're going to go back to corn for a little bit. We've had a couple of questions. As you can see from this daily chart that I've put into the corn, on the corn market, you'll notice that we've made a 78% retracement down there at the 383 per bushel level. We looked at that on Monday. Here we are Wednesday. We had a big rally. It went all the way up 23 cents to 407 and change, and now it's backed off to a 61% retracement of that move, coming in at around 390. The key here is that if this is really good, corn is not going to take out 383 again, because if it does, then you're looking at something far, far more bearish than you might want to put your money on. And that's the main thing, is you got to get below 382. Something's wrong with this, because it hit it perfectly. This is the largest growing crop that we have in the United States. Its value-wise is by far the greatest. So all that's pretty much what we're looking at. We've got a caller from Florida. Bill, are you there?
I am, Larry. Good morning.
Good morning. What can I do for you?
Larry, when you suggest that things don't look right, I'm assuming that you're referring to the technicals, and as much of a technical trader as you are, you're getting concerned that maybe the technicals aren't giving you a true picture. I don't want to put words in your mouth. What do you mean when you say things don't look right? Are we expecting something different from what we're seeing technically?
Well, yes, what I'm looking for is I'm looking for aberrations, Bill, and we're seeing one today in the silver market, where silver made a new high by 30 cents, which is $1,500, and yet gold can't hardly make a retracement and can barely get up on the day. So that's a red flag for me, because they usually have a correlation of 95%. So that's telling me something. The same thing in the Treasury notes. The notes are by far the biggest of all of the interest rate, biggest of any futures that we trade, no matter what it is. But in the interest rates, they're much larger than the Treasury bonds. And here, again, we're seeing people are not buying notes like they are buying bonds. And I'm just curious of why that is happening. And all I'm doing is watching it, because I can't interpret, what's going on fundamentally, because I don't look at that. I just look at the price action. That's what leads me to believe that something is not right in wanting to own interest structure up here.
Okay,
I hope that helps.
Well, no, it does, Larry. And I'm assuming that somehow some way the massive debt in the world, we have more debt than ever in the history of our economic systems, that somehow this is going to find its way into the market. But like you say, it's a fundamental issue, and I don't understand it any more than anybody else does. But obviously there are there's going to be a shakeout in the debt. How that translates itself into actual, the price action and all these different financial instruments, I guess, remains to be seen.
It certainly does, and usually the history says that it's not going to be repaid. In fact, if you looked at the numbers, it's almost impossible to pay it off because the amount of interest that's accumulating is getting, and even though interest rates are low, you can imagine what would happen if interest rates went high. It would really throw a wrench into this thing. So we'll see how it pans out, but history says that debts this size never get repaid. They might get remonetized. In other words, they'll float the dollar against it or something like that. But to repay it or not, this doesn't look like very feasible. That's just why I'm surprised that these rating agencies, don't take that into account. But what do I know?
Well, Larry, I think the beauty to your style of trading is, if you're looking at a 4-hour chart to then bring it down to smaller time frames to execute a trade, your trades, I'm assuming, are from a matter of hours to a matter of days. So with that kind of a time horizon, I think you're pretty safe.
Well, it's safer than trying to do a daily or a weekly, because these swings that we're having now, as you can see, are, really dramatic. But if you get down to a 30-minute or a 4-minute chart, you get a pretty good idea of, what your risk is, and that's what you try to focus on.
Larry, typically, how long are you in a particular trade? I know it varies. That might be a hard question to answer, but is there any kind of a general...
Yeah. 3 to 5 days, because I'm looking at about 14 different things, and I'm looking for things that, but there are things that I'll be in for, a long time. Some of the grain positions that we had last year, we were in for a great, well over 6 weeks. That I've been short some major banking stocks here for the last 5 weeks, JP Morgan, and let me see, there's JP Morgan, American Express, Caterpillar. In other words, some of these bigger stocks, have been going down. We've been in those for 5 or 6 weeks that are doing relatively well.
So in the currencies, Larry, I assume that's a
the
shorter
currencies.
time frame.
Yeah, the currencies, the greatest things in the world, because they give you so much volatility. We get 20-point swings in the S&P once or twice a day in the euro. In fact, this morning we've had a 200 pip move several times. That's equivalent to 40 S&P points, and it trades much easier because it's more liquidity, and so it's just much better to trade than the E-mini S&P. But that E-mini S&P, I guess they give the people a red badge of courage, because once they can beat that, they can beat anything. But the euro is much easier to trade than the S&P 500 and that E-mini.
And your time frame in the euro dollar is probably more like hours to a day or two?
Yes. Yeah, I look at 30-minute and 4-hour, because 4-hour gives me 6 weeks of what it's done, and the 4-hour gives me a pretty good idea what the patterns are over the last 7 or 8 days. And I move down to a 30-minute, and as I get close to executing, I go down to a 15-minute, just to make sure that my price is in at the right spot, and that's what I try to do. And then I usually just put a 40 pip stop on the euro and see what happens. So far today, it's been working quite well, but it's still early in the day.
On the euro dollar, are you using the 15-minute to enter the trade, Larry?
Yes, I'm using. I do the analysis on the 90-minute and the 60-minute, but I use the 15-minute as far as my entry level.
Okay. Very good. Nice talking with you, Larry.
It's nice talking to you, Bill. Anytime. And being from Jupiter, Florida, that means you're into astrology pretty heavily?
I love it.
All right. We'll talk to you later, my friend.
Thank you,
Okay.
Larry. Bye-bye.
Okay, you bet. Okay, we're still up here in this S&P testing the 2047 level again. We've been as high as 2047 and a quarter so far. If we get above 2050, this similarity that I'm looking at in moves would certainly be wrong, but it's going to be interesting at this level of 2047 to see whether it's going to work or not. But it should not get above 2051 if it's any good. But that's just the way it looks like. As far as the euro, we're taking out the highs that we made just a few days ago, long before. I mean, we broke from 114 down to, we're just coming back to a 50% retracement now. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to take a quick look at that German bund. We had that real crazy day on the 27th, and you can see since that time we've just been backing and filling at the 38% retracement of the move back. Remember now, the bonds have been up here 3 times almost into new high ground within 1 or 2 ticks. So our 30-year Treasury bond would be testing that high and you can see the difference. That's one of those aberrations that I'm seeing that we just talked about with Bill from Florida, is that it should be that notes and bonds should be, well, bonds are, but notes should be, testing those highs, and they're certainly, not even close to doing that. They'd be equivalent of under 2 full handles on the bonds compared to what the notes are doing. So this is another example of this. Now remember, this is one of the things. We're coming into the end of this week and early next week. Of course, we have a holiday on the 4th, but we have a lot of cycle stuff, folks, that's coming together, something like we haven't seen since March of 2009. This is, in fact, going to be a very important event, but it's still too early to tell whether it's going to be either a low or a high. It's still, way out of the ballpark to find whether it's going to make that move or not. So we'll watch that very closely. I mentioned here that we do have a lot of resistance at this 2047 level in the S&P. And if we don't get much above that, then we're getting ready to move down. We've, we hit it once and, backed off 3 or 4 points, but that's just the early part of the day. You really need to get about an hour into the session. And if you're trading below 2047, then you just put your stop above that recent high that we've had here at hit 2047.75. Then I would say, you don't have to risk more than 4 or 5 points at that spot, and that makes it the ideal trading situation, because then you can quantify the risk that you're in, and that's the main thing. Silver still continued to back off quite a bit. The gold is held up. It hasn't moved. When silver dropped 30 cents, gold could only move $3. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.